Okay, let's get going here. Well, I guess there's some positive news. I guess the Dow's up about 500 points. I guess there's some news at a possible resolution of what's going on in the Middle East. I don't know if it's just rhetoric or whatever, but hopefully it's not because, as we talked about yesterday or last week, is like, we were kind of on that downward trend and, time would tell. And I think we're still pulling back in demand a bit. Interest rates last week were up over 6.6%. They're back down about 6.55 for a 30-year average. The FHA and VA just fell below 6%. I'm just looking at the ticker right now, but 10-year Treasury is on its way down, so that's good news. So we'll see what happens, but um, yeah, it's a little bit of good news to see. I hope we have a resolution of what's going on overseas, not just for business or whatever, just overall. It's never. I mean, it, it's just not a good thing. So, but I'm going to share my screen so we can kind of get started. But I will say, hey, it's definitely starting to have its effect a little bit. Um, all right. Hopefully everybody can see my screen here and we can move on. Uh, So the Dow, as we know, although it's up about 500 points, yesterday it was about 45, 216. Since all this has started overseas, remember we popped up over 50,000, probably about 3 weeks ago. So I anticipate, once all this ends, it will probably be back up there and we'll have some recovery and whatnot. So I'm pretty optimistic about that. But I would say that there has been a pullback in demand, not as much as maybe some would think, but especially when they're at 6.55%. But I would probably imagine that a lot of the business that's being done over the last week were maybe some buyers that may be locked in at, when interest rates are about 6.2, 6.3. But I don't know. We'll see. But as far as when we look at luxury, which we will, the luxury business continues to do very well. There's a lot of we're probably setting records with ultra luxury price points over $10 million that are still continuing to do well. And it probably would be that with everything that's going on, of course, there might be some panicked sellers that want to sell. They might be a little nervous, and there might be some cash buyers that are out there taking advantage of it. So maybe some deals because it is a buyer's market in that part of the market. But yeah, so we'll see what happens. Okay, it's hard to kind of predict when you have chaos going on in the world, but hey, we'll see how the everything shakes out over the next 2 to 3 weeks. But I think from what I'm hearing and from the news that I saw this morning, it sounds like we're on the right track. So, but yes, the Dow is down to 45,216. It's up about 500 points right now. Fourth quarter profits, I might as well just eliminate. I don't know what's going on, but we're we're almost we're almost into April and they haven't even finished out last year. I'm sure that had something to do with the government shutdown and whatnot. Maybe they're just behind, but I can't even get fourth quarter numbers. But of course, I'll update that when I get them. But there's nothing to report there. Unemployment, we'll probably see. I'm going to probably say we'll probably see some numbers maybe next week. Um, and for March, March numbers, and see where we're at there. I don't anticipate a lot of major change, but we're fluctuating between that 4.3, 4.4% in unemployment. But we'll probably have numbers next week. We'll kind of see how March kind of turns out. But 30-year fixed versus a 10-year Treasury. This is as of last Thursday, but you can kind of see that's what I was talking about last year or last week. Interest rate popped up over six. I think it was about 6 point. It topped out about 6.65%. At Thursday, it's 6.62. We're down to 6.55 right now. The 10-year Treasury is at 4.32 last week or 4.35. So we're starting to make some progress here, but still, it's like I said. We're probably going to hover. We're probably going to be around this interest rate and 10-year Treasury until we start seeing some changes overseas and maybe some settling down. with the financial markets and whatnot. So interest rates are, but one thing I did notice when I pulled up the charts on the buy downs, on interest rate buy downs and concessions, I mean, they're definitely up. I mean, it definitely plays when the interest rates are where they're at. You start seeing spikes and being in a buyer's market, balanced to a buyer's market. I mean, there's some markets that are shifting towards sellers, but it's just prime condition for more concessions and buy downs of interest rates, and that continues to increase. As the interest rates increase, we start seeing concessions increase. So we're definitely starting to see that. And sellers are open to it because we're at a even though inventory is just really kind of stabilized, but we look at our CMI, we pretty much just kind of we're seeing when we get to the CMI chart, there's some green there, but the green is really not. We're maybe up a percentage. We might be flat in most markets, but we're not seeing, and that's because of the pullback in demand and inventory basically stabilizing. But I don't think we're going to see a lot of change from there. But we'll see. Okay. But again, interest rate 6.55%. But let's look at active listings. Active listings, this is in Scottsdale. Inventory is about 4% over last year. March projection new listings. I actually came in, last week we had a huge influx of new listings come in when I looked at the charts. So I kind of revised I was projecting maybe down about 5-7% new listings, but we actually will be pretty much flat to up maybe a point. We had a big influx pretty much across all markets with new listings hitting the market last week. But definitely a pullback in demand since the beginning of March. I mean, we were on a win streak there for a while, for probably 2-3 weeks, but we definitely have pulled back, and understandably with what's going on. I think there's some uncertainty out there. So especially with interest rates coming up the way they have, I think people are just pulling back a little bit. CMI stabilized in the low 120s. We were probably there last week too. Like again, I think we were up maybe 1%, but 120s, but you're more balanced than anything else. Certain areas have favored buyers, but we were 120s is not bad. I like to be as in those mid 130s, but still there's a great balance between supply and demand. Plenty of inventory out there. There's still transaction counts happening. We just not the trend that we were seeing that what we would expect when we're this early in the season, which is March. March and April are our biggest months of the season. So, but still good balance of overall inventory. Here we are in Paradise Valley. Inventory levels up about 10%, but we've kind of flattened out. Definitely kind of stabilized, which is not a bad thing, considering the level of demand that we're seeing. March projection will be up about 9%. And I think we probably, and when we talk about being up over last year, we're talking maybe 4 or 5 new listings over last year. It's not that much, but there's still new inventory hitting the market. Steady demand since March, and like I mentioned, what's really performing in Paradise Valley in that ultra luxury are those $10 million plus properties, which continue to do extremely well. So. But again, good balance between supply and demand. Probably about 117 to 120 is where we're fluctuating in the CMI, and with the Cromford Market Index, which is a good balance between supply and demand. Nothing wrong with that, considering. West Valley, we're down about 7%. March projections will probably be about flat to last year, and I had to revise this. Last week we had a lot of influx of new listings coming in, so we're down about 3% new listings. But of course, interest rates, especially last week, were in about 6.65%. I think we kind of peaked out. I think we definitely had a pullback last week, and we'll see that in the weekly transaction count chart, pretty much across all our markets, with the exception of Southeast Valley kind of flattened out. We had a big increase in Southeast Valley, but it's kind of dropped and it's kind of flattened out. I think, and it's obviously there's a reason why, is because of what's going on. But CMI stable, low 120s for the CMI, so we're kind of just cruising right along in the low 120s. Certain markets are in the 130s, especially the Southeast market. Southeast Valley is definitely it's in the mid to high 130s. But we've really just kind of stabilized. There's not a lot of, when we're in the season, especially when the trend that we saw probably about 3 weeks ago, where we were up, and we're really on track, we're kind of losing steam a little bit. I would say for the month of March, when we were tracking in most markets, we were up double digits over last year in the month of March. We're losing steam. I mean, we're probably there's a lot of markets we're down in the single digits, still above last year, but we're just not getting that oomph and that push here. But again, remain CMIs basically in the low 120s. Still a great balance between supply and demand. It's not like business has just dropped off. We're just it's kind of pulled back from the big increases we were seeing early on in the month of March. So, but probably a lot of sellers still competing, so it's probably a good time to be a buyer out there. Even though interest rates are high, just make sure you're having the conversation with your buyers with concessions and whatnot, because we're still in that buyers to balance market type of area. So sellers are competing, and they're definitely probably listening to all offers. So just make sure that you are having those conversations with your buyers. East Valley inventory levels, we're down about 6%, but you can kind of see that line. We're just kind of flattening out across the board. March projection, we're down about 7% in new listings. But the CMI is on the rise, and led by Chandler. Chandler and Southeast Valley, some of those far east Southeast Valley markets are doing extremely well. But we're in the high 130s, and that's exactly where I like to be. High 130s, low 140s is kind of perfect. I mean, you're definitely shifting in favor of sellers, but still we're kind of right on the cusp. Plenty of inventory, good level of demand. So there's a lot going on. But it's like a broken record in the Southeast Valley. It's just one of those. It's just a great area. So, but it's good to see. But overall, just a bit of a pullback. We're seeing a bit of a pullback in demand right now. So, but here I just kind of covered this March projection and new listings. You can kind of see probably 630 new listings. Big jump last week, but so I kind of put us probably finished about flat with new listings. Paradise Valley will probably be up about 9% with 16 new listings. West Valley down about 3%. We could finish flat. We've only got a couple days left in the month, so we'll see what happens. But I think that's probably kind of where we're going to be. Okay. And then East Valley down about 7%, 1,250 new listings, but not a lot of change from what we were talking about probably 2, 3 weeks ago with new listings. Still new inventory coming online. Good balance between supply and demand. It's not like I'm getting a little nervous with a pullback in demand, and we're starting to see big increases in inventory, which of course is going to bring that CMI down, which brings us more into a buyer's market. But pretty good level, not overly, not overly saturating the market with new inventory, but the CMIs are still healthy, still healthy CMIs. Here we are at Scottsdale, active listings under contract. We just kind of flattened out right here. We're still up about 16%, but you'll look this in the transaction, the weekly transaction. We definitely have lost a little bit of steam. Okay, we'll see. You'll see here shortly, but listing on the contract up about 16%, and we were up over 20% probably about 2 weeks ago, 2, 3 weeks ago. But it's starting to settle down a little bit. CMI is definitely hovering around the 120 mark, low 120s. But March transactions losing steam, but still, this is what I'm saying, exceeding last year by 12%. Last week, if you remember, we were about 16%. So again, you're starting to see a little bit of losing steam. But still, we had such a good bummer. We had a great, like the first 2 weeks of March were fantastic. And then we just kind of pulled back with everything that's going on. But interest rates hovering around 6.55%. So hopefully we'll start seeing some relief with that. Okay. Paradise Valley, definitely, we'd had that big dip. I mean, we talked about that big dip, is that, we had a lot of closings the end of February. So it was a little bit inflated, wasn't really kind of telling the true story, but now we're kind of seeing where the true story is here. But definitely, we're up about 15% over last year in Paradise Valley. A lot of it's being dominated by just ultra luxury in Paradise Valley, and they're doing extremely well. But again, we're up about 15%, but and pretty steady. We'll look at the weekly transaction count in Paradise Valley. It's just like this. Usually it's volatile. You'll have 5 transactions one week, you'll have 12 the next week, and it's just like this. But the chart is just kind of like this, which is steady. That's what I'm saying. Paradise Valley, driven by ultra luxury, is actually not too bad. Okay, which sometimes surprises me. It kind of goes against history. When the markets are volatile, a lot of those cash buyers tend to pull back a bit till there's a little bit more certainty with what's going on. But they're out in force right now. They're out in
Greg,
force. Yeah.
my question is based on this, is I'm curious to know those $10 million buyers, are they for personal use or are they corporations putting money into a house and
Good question. Fortunately, I can't figure that out when I'm looking at Crawford, but that's a good, that's a good question. I don't know. I would probably assume um, there it could be investment, it could be. I think it's a lot of it is because you're a buyer's market in Paradise Valley. I mean, and I think there's a lot of sellers that are probably listening to offers, and what I should do is, and I'll do next week, is I'll pull the chart up and we kind of see where offer price, list price to closing price, and kind of see how the big difference. Because if we look at Paradise Valley, and it's a big gap between list price and sell price. It just tells me there's a lot of buyers that are going in and taking advantage of the buyer's market in Paradise Valley. So,
well, I
but
think
yeah,
also during tough times monetarily, with interest rates and people not, a lot of people that have money will park it in real estate because they know that
yep,
eventually it will pay itself back. So instead
yep,
of going into a market which is up and down, they'll
yep,
take some out and they'll park it in something with a solid asset.
yes. So we've talked about this, and that's a great talking point, Amy. But we've talked about this probably over the last year and a half, that what the outlook is for the Arizona market. And to your point, there's probably a lot of investors, and it could be any price point, that are actively looking to park their money, because probably for the next 5 to 10 years. I mean, it's going to be a great market. We're very unique. That is not changing, only because of all the private investment, all the business that's moving into the state and whatnot. This is going to be a great market for the next 5 to 10 years. So I think a lot of those people recognize that, and they may be parking their money. They know that they're going to get a return because of the outlook for the Arizona market. The only thing, the big question mark is, and it always is, and is water supply and everything else. But growth is not going to stop. I mean, it's going to continue to grow here in the valley, not only from a business, incoming businesses and private investment, but also everybody needs housing. So that might be a good point. And people are parking their money, all price points. You know. West Valley, listing under contract up about 1%, but you kind of see it's just kind of flattened out, up about 1%. So we're about flat to last year in listings under contract. And you'll see in the weekly transactions, we've lost a little bit of steam from where we were probably 2, 3 weeks ago, but stabilizing low 120s, low 120s, which is pretty consistent across the board, except for some of the certain outlying areas. But hey, you're in the 120s. That's considering what's going on. That's not a bad place to be. It's just a good balance of supply and demand. It's not like business has completely dropped off because of what's going on, but it's not bad. Here we are in the East Valley. East Valley's up 9%, even though we've kind of flattened out, but we had that big surge probably first two weeks in March. I mean, and it was a catch up because East Valley was kind of slow start. All of a sudden we hit March and it was like boom. And you can kind of see that in the listings under contract, but it's kind of flattened out a little bit. And you'll see in the weekly transaction count, it's just kind of come down and pretty consistent across all markets. We just kind of flattened out, losing a little bit of steam. But March outperformed. We're up 10% over last year, on weekly for the month of March, total transactions. And if you remember right, we were probably up about 16, 17% in the East Valley. So again, we're losing a little bit of steam. Okay, losing a bit of steam, but hey, high 130s in the North. I mean, it's like a broken record in the Southeast Valley. High 130s, great market, active market. So still outperforming all markets like it's been doing for probably the last 18 months. So here's your weekly transaction count. So this is Scottsdale, and you can kind of see where all of a sudden we got to end of February into March, we were just like really doing well. Just absolutely cranking. 2025 is your blue mark. And look where we are in orange. We're just like boom. And probably over the last 3 weeks, it's been a little bit tough, and I think that's with what's going on. I mean, and this is pretty consistent across all markets. We're just kind of losing that steam. Still up, we're still up probably 14. It's at, probably up about 14% in transaction count in March, but we're slowly losing that steam here. And we could kind of see the blue mark in probably towards mid getting into April last year. We started to see some trends. So we're up against some big numbers over the next probably 2 to 3 weeks. So it's definitely starting to lose some steam, and we're losing those increases. But this just tells me, I mean, if you want to put a positive spin on this, is that when all of a sudden the first part of March, you started getting interest rates were probably around what 6.1, 6.2 at one point. Right towards the end of February, we actually dropped a little bit below 6%, and then just picked up some momentum. So, I mean, listen, if we can start seeing some recovery in interest rates and everything else, I think the potential is there to finish out the season strong. Okay, but we just got to get some more. We're just kind of hoping for things to settle down overseas, and hopefully we can get back on track. But it's definitely had its effect. It's definitely had its effect in business. I mean, there's just no doubt. Here we are. Here's Paradise Valley. See how you know how I like to do? I just like to draw that trend line. And because Paradise Valley, because there's minimal transactions, you're not talking hundreds, of transactions. It could be 10, 8, and it's always like this. But it's been steady Eddie in Paradise Valley pretty much all season. Okay, we draw that trend line, and a lot of it being dominated by ultra luxury, but it's been pretty steady in Paradise Valley. And of course, you're kind of the CMI is actually coming up at about 117. But listen, if you were to ask me if, I mean, I would, with everything that's going on in the financial markets in complete disarray and whatnot, with those cash buyers, maybe I just, would you ask me, hey, what market would probably get hit the worst? And you would probably say probably that luxury end, that where people are paying cash, that maybe want to kind of hold back a little bit to get a little bit more certainty. But that's not been the case. Okay, and that has not been the case. Cash buyers and that luxury are out in the market right now, possibly taking advantage, of the market, and maybe parking their money and finding deals, and that's probably what's going on. So who knows? Here we are in the West Valley. See, look, we're pretty consistent. We were just kind of on a roll, and then over the last 3 weeks, we've just been kind of coming down compared to. I think we're about 9%. But last week we were up double digits last set, but we're losing steam a little bit. We're starting to see that, which is very unusual because we're in the middle of our season now, so it's kind of a bit discouraging. But if you put the positive spin on, if we can get some things just kind of settle down a little bit, put a positive spin, we could potentially see a quick recovery. Okay, a quick recovery. But this is pretty consistent across all markets. Same with it here, East Valley too. I mean, look at the East Valley. We had just some big weeks, just catch up, and then boom, been pretty consistent. We just kind of came down, and now last week we're pretty consistent with, pretty flat to the week prior. But it's pretty consistent just where the demand is, just the pullback in demand, a little bit of losing a little bit of steam, and we're probably seeing that. And a lot of it has to do with, I'm sure a lot of it has to do with where we are with rates, and even though rates are still good, when you're talking, when you get in there and you're in a market, in a more balanced buyer's market, and you got sellers competing, there's still opportunities for buyers out there. We know that these rates are not. What's happening right now is not going to stay. I mean, this isn't. We saw what was happening in the beginning of the season when we were down below 6% and the markets were fine. We were over 50,000, and I think if we can just get some more stabilization with what's going on in the world, I think we can get back to that point and start seeing some recovery and have a good end of the season. So that's. But you know me, I'm Mr. Optimistic, so I'm looking at the trend here, where we were going, where we are now, and then if we can kind of settle down a little bit, that we can have a good, strong ending to the season, because listen, we're March and April are our biggest, but there's still business to be done in May and June. So, but we just need to get some type of recovery there. So here we are, listing success rate. Not a lot of movement here. We've been, I think last week we were 78% in, again, not bad. This is Scottsdale Paradise Valley. 78%. We didn't move from last week. No movement there. No movement in Paradise Valley or Scottsdale, but 78% listing success rate. But listen, when you're at that inventory levels, you're not over inventoried. You get good balance between supply and demand. I mean, you're going to probably be in these closing rates. So 78%, almost 8 out of 10 listings have a successful sale. These are still things that still data that you could sell share with your sellers. And it's still, there's still business being done, so it's still a good opportunity for your sellers as well. Um, West Valley 76, no movement here. We were 76 last week. We're not going to hit that 78 where we were in March, and that's because we just had that pullback a little bit in demand. So 76% West Valley and East Valley up 1 point. I think last week we're about 81%. We're at 82%. I don't think we're going to hit the March last year, 83%, but still, East Valley, 82%, still leading all markets with a listing success rate. 8 out of 10 properties have a successful sale, and that's significant. I mean, make sure you're sharing this data with your sellers. That's good data to share with them. Okay, contract ratios. Not a lot of change here. I mean, definitely reflecting a pullback in demand. Scottsdale, last week we were about 37.4, week prior about 38.1. So again, we're starting to lose a little bit of steam. There's a little pullback in demand, but still pretty consistent where the CMI is. I think the CMI is in the low 120s. We're just about that 35 mark with, so that's pretty accurate. This is kind of my checks and balances, as everybody knows. I always like to we look at the CMI, but I always like to see if it's an accurate reflection of what's going on in the market, and it pretty much is in Scottsdale. Okay, but 30 said this is kind of that 25 to 35 range. If you're kind of with that 30, you're more balanced than anything else. You start veering off and getting above that 35 range, above average, and it's a healthy market. So 37.4, a little bit of a pullback from the week prior, but still healthy. Okay, still healthy. Paradise Valley, pretty much flat, and it's like steady Eddie. It's like what we see on those transaction, the weekly transaction count. Just not a lot of movement. We was 24, not a lot of movement there. Still, I would say we're what 117 on CMI. We're at 24, which is just above. We're like you're just a 25. You're probably more balanced. I mean, we all know the 100 is your in the CMI. The 100 is balanced. Anything above technically is seller's market, below is buyer's market. But we kind of extend that buyer's market up to, for me, I think it's more of a buyer's market until you start getting into the 120s, to be honest with you. And I think Tina Tambor would agree because she's kind of the master of the data and whatnot, and I think she agrees as well. You start getting the anything that 100 to 120, you kind of extend that buyer's market. You know what I mean? And obviously that's what we're starting to see in Paradise Valley. I mean, there's still a lot of deals to be had, sellers competing, some more of a buyer's market than anything else, but not a lot of movement there in Paradise Valley. West Valley, down maybe a point. Okay. Again, pull back a little bit in demand. Well above that average, the 30 to 40 range, which where we're at. We're probably in the low to mid 120s in the West Valley. Okay. We're at 47.6. I would think that maybe you start looking, remember, I like to do that checks and balances. Well, 47.6, I would probably think you'd probably be closer to maybe the high 120s, but we're in the low 120s of West Valley. Not a lot of movement, a little bit of a pullback there, but I think that's pretty consistent what we're seeing across our markets with demand and whatnot. So East Valley, a little bit of a pullback here, 56.2 week prior. We're at 55.5, but we saw that in the weekly transaction count, kind of a dip, but kind of flattened out a bit. So not unusual. 55, well above that 45, and we're probably in the high 130s in the Southeast Valley with our Cropper Market Index. So pretty consistent with what we're seeing. Okay. Always look at the map. Max kind of changed from last week. Remember last week we actually was very optimistic because we were starting to see more orange and yellows, and but now we're right back to where we were with some of the greens, which is your green is more warm than anything else. But we were starting to see some areas, especially in the West Valley, far West Valley, we're starting to see some yellows, which is basically the market's heating up a bit. And actually down in the Southeast Valley was probably down in more south here we were starting to see some yellows as well. But and I think in North Scott, but probably the central Scottsdale region, we're seeing some yellows, but now we've just kind of pulled back. We're kind of in that, we're kind of in the heat mode. We're just kind of pulled back to where we were at the beginning of the season, which is reflective of what we're seeing over the last couple of weeks, 2 to 3 weeks, with everything that's going on. Just a bit of a pullback in demand. So, but I always like to share this heat map to kind of give you areas where we're starting to see some activity, and it's pretty consistent. I mean, I would probably anticipate for West Valley, definitely down in Southeast Valley. Little surprised we didn't really see much going on in the Scottsdale area, but look at Paradise Valley, Tempe, South Scottsdale, just kind of in those blue areas. And so yeah, I mean those are when you're in a really strong market and you don't want to see a lot of blue. You're going to see more green than anything else or yellows. Yellows, of course, is I should show you this map. You should have saw this map probably about in 2021, 2022. Basically, it was all yellow and red. I mean, that's what it was. So, but this gives us a good indication of kind of where we're at right now, which is no different than what we've just looked at the prior charts. Okay. CMI, here we are. A lot of green. Okay. A lot of green because of probably 3 weeks ago we saw a lot of red, but a lot of green. But here's my point with the green. We're still, I mean, it's slight increases. I mean, we basically have stabilized up 2%, flat 1%, 6%. Good years actually up 16%, but a lot of these are low single digits, which tells me that market's pretty much stabilized. And when you're in those 120s, not a bad place to be. Okay, I mean, we all obviously want to see more, but it's not. We're not below 100 where we're ultra buyer's market. I mean, there's still a good balance between supply and demand. Buyers still have some power and some leverage. Okay, and in some markets, sellers have more leverage than the buyers. But this is, seeing some green. We'll see what happens. I would probably anticipate, just based on the numbers that we saw last week, that we probably would see maybe a little bit more red next week, especially if the inventory counts continue. You know, the we're new inventory is hitting the market. I mean, we're a little bit exceeding what I thought we would do, but we're starting to see more inventory hitting the market. And when we get a pullback in demand, your inventory is going to increase. Of course, these CMIs will probably reverse course a little bit. But listen, we've just kind of flattened out, stabilized market. So we'll see what happens, over the next 2 to 3 weeks. Hopefully, things settle down a little bit. So, but that's kind of it. I mean, overall, I say overall, understandable with what's going on in the world as well as interest rates where they're at. The financial markets are a little bit in disarray. Anything surprising? Not really. Not really, but it's pretty consistent across all markets. We just have a little bit of pullback in demand, but still, we're in the 120s. Probably average CMIs in the 120s, which is great. It's definitely a good balance between supply and demand. It's not like demand has completely fallen off, but we definitely had that pullback from where we were at the beginning of March and the end of February. So, any questions?
Greg, when you pull those numbers for uh, the difference between the list price and sale price,
Yeah,
um, I I know that most people will just pull from the last list price versus to the sold price. I think you really have to delve into the first list price as well.
yes, there's a chart for that too.
Okay, because I really do think that
Yeah,
once
you got
you,
to take into account price adjustments and everything else. Yeah, absolutely.
right?
And there is a chart in Cromford that can do that. Original list price to sale price.
Because
So
some of these numbers, I mean, I see when I get, emails and I see it, I'm like, maybe they started out at 400,000 more than they should have, and they dropped it by 300,000, and then they got an offer, and it only looks like it's 100,000 off the list price, but that's not true.
I'm pulling the chart up now actually because I want to see. And now my curiosity's got me here. Um, yeah, it's definitely yeah. I'll pull some charts together for next week and stuff. But there's definitely some yeah, I mean, because I always like to see, list prices like we're going, I'd probably say Scottsdale, Paradise Valley, there's a difference which is significant when you're talking those high-end properties, anywhere from 6 to 8%. And when you're talking those high-end properties, that's a significant amount of money. So that definitely tells me, I'm looking at right now, that definitely tells me that it's definitely a buyer's market, and there's opportunity. Those buyers are definitely seeking out some opportunities for some good buys. So yeah, 6 to 8% is pretty significant for those markets. So um, oh, Chris says, what is the name? It's that list price versus sale price per square foot, 12-month average, Chris. But you can do there's different charts that you can kind of look at as well. Um, And then I kind of focus in on certain price points so you can really dive into the data. And those are just initial numbers. Um, so here's the sale price to list price ratio I just pulled it up, and that's another good one too. Um, this is for Paradise Valley. Sale price to list price ratio is 94.65%. It's pretty significant. Okay. So yeah, I'll put some stuff together because I'm curious, definitely over the last couple of weeks, I'm sure that that's probably one of the reasons why we're seeing the performance that we're seeing in high-end luxury in Scottsdale and Paradise Valley. So good stuff.
Well, when I used to go to my sellers for price reductions or improvements, enhancements is the word today that everybody's using.
Uh-huh.
Whatever. I used to print out the history of those that have sold in their same comps. And what I would do is I would take a green pen and a red pen with me, and I would show them that, here's how this price history had to happen in order for somebody when it hit that price to make an offer to come to a terms for the sale price. So
Yeah.
if you're looking, I mean, it was a great tactic that I had learned many, 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 many moons ago, and it still holds true today that if you're really looking for a price enhancement, you print that portion of the listing out and of the solds and show them that
Hmm.
when the house got to this price, they got an offer on it. So
Yeah.
maybe you got to think about, not a $5,000 price enhancement.
Well, I'll probably next week include some charts because I always like to monitor where we are in price adjustments, and we've seen a number of elevated levels of price adjustments, reductions as well. So we'll dive into that next week, I think. I'll pull some charts on all that. We definitely were looking at that last year. I remember this time last year, and because last year we had it was tough. It was tough. So I was looking at where are we on price adjustments and as we enter into more of a buyer's market, and you can definitely tell where it's trending. You have an increase in price adjustments. Your sale to list price ratios are coming down. And so it's good to see that trend, which makes sense probably over the last 2 to 3 weeks. I would probably anticipate seeing that we are seeing a bit of an increase. We're already seeing it in the amount of concessions. So concessions are up a couple points from where they were probably earlier in the season, which usually equates to what's going on in the market. So yeah, it's hey, it is what it is. You know
The
what I
name
mean?
of the game, negotiating.
Yep. Yep. All right. Any other questions? Everybody just hang in there. I mean, there's still business. I know there's a lot. I know a lot of you are busy. And there's certain areas where listings are getting multiple, believe it or not, multiple offers. So it's you just when you're taking listings, you want to make sure you're pricing it correctly, making sure that it's set for market. Whether it's staging or whatever, you're going to probably have to compete a little bit more. So you probably have to put a little bit more effort and be honest with your sellers too on what they need to do to prep their house for market. And I know they're tough conversations too when you're sharing this data with them, like, hey, we got to price correctly because here's where the market is, list price to sale price, and we've got to make sure that our we're priced it correctly. And those are sometimes we know those are tough conversations. But as long as you share the data with them, okay, and remember, you have access to all this, and I'm going to keep pushing it. It's only $30 a month to be a member of Cromford, and you can pull it all yourself. You know what I mean? But you have access to this report. You know, that's if you could just pull that in and maybe just invest in the Cromford and pull that data, just have those conversations. I mean, these are conversations that you can. I mean, the numbers don't lie. We all know that. Data and numbers don't lie. Okay, these are hard conversations, but it makes it a lot easier, especially when you're having conversation of price adjustments and price reductions and everything else that you share the data. Here's where we're at. Okay. All right. Any other questions?
What's a better word than enhancement?
Let's just call it what it is. I mean,
Yeah, that's not a really great word for a seller.
Improvement.
price
Improvement, right?
improvement,
I know. Is there any other good words out there?
We just do price reduced. I
right?
mean, I'm
There
just
you
Price
saying
reduction.
go.
stuff. Just
There you
reduced. The price came down. That's what buyers want to know. They want to, oh, it's cheaper. Fabulous. That's what I want.
Exactly.
Love it.
But you
V-Ron.
can focus on things like best value in the neighborhood, right? Lowest
Yeah.
price per square foot in the neighborhood. Like those things too are huge key triggers versus just saying, hey, it's price reduced.
Exactly. All right. Tomorrow, Um, copy with a broker tomorrow. Hopefully everybody can join me. We're going to do, I've had a lot of people, hey, can we start doing some more case studies from the hotline and stuff? We're going to do that. We'll do that tomorrow. I'll have a new lineup because, well, the last time I did it, the hotline's been busy. So I'm going to pull some stuff from the hotline. My notes, we'll do some of that tomorrow. And then Thursday, we're going to talk a couple of things. I think last week I told you I wanted to talk about this new relationship with Remax and Zillow, and the preview listings, which really don't affect us. We can't really use that, but we'll talk about that more on Thursday. But the one thing, because of clear cooperation and our MLSs will not allow that. There's some area, believe it or not, there's some areas of the country that do allow that, but unfortunately we can't do that. But we'll talk about more of that on Thursday. But
Mr. Richardson.
the one thing that is good is the new deal with Zillow for and I don't know if a lot of you use showcase listings with Zillow. I know everybody's like anti, some people are anti Zillow, but with the showcase listings, what can be very, if you're using your showcase listing, you know that it could be very expensive. I've heard anywhere from $400 to $500 for a showcase listing for your listing through Zillow. Well, the Remax deal now with the relationship we struck with them, you can get a showcase listing for 150 bucks. A pretty good deal. So we'll talk about that a little bit more. And there's another program I want to share with you as well on Thursday. And I think I'm trying to work on a guest speaker here to just talk about the other tool that I want to introduce that Remax just introduced, which has something to do with working with your Benzers and a company that actually can quote work from your Benzers, that the company that Remax bought.
Electric? I
No, it's
know. At first I thought it was Mila's.
oh, what is it?
That's yours.
Hold on. Stand by. It is Boss Cat. Everybody heard Boss Cat? So I'm going to probably Thursday, I'm going to try to get Celeste on here to just kind of give you an overview of Boss Cat. But there's other companies very similar to this, but I've heard really good things on Buzzcat. Like I think Nate Martinez talked about Binzer Buddies. I think is another local company that does basically you send them your Binzer, you send them the inspection report, and they give you a quote on everything. Okay, they line up all the contractors and everything else. But Boss Cat is very similar. But from what I've heard the reports and that they generate. And I've heard that they're really competitive on pricing and everything else. Plus, it's through Remax. And I think I'm gonna try to get Celeste on Thursday, just kind of give you an overview of that because they launched it in Arizona, and because we have, hey, we're trying to leverage those relationships. You know what I mean, with us and the size that we are. That it's an exclusive in Arizona. I think Arizona has an exclusive on Bosscat right now, and there's a couple other states through Remax that they're testing. There's kind of test markets. We're definitely one of them. And so I definitely want to get that introduced to you because it might be a good tool for you. Okay. So we'll talk about those two things on Thursday through Power Mindset. Okay.
Hey, Greg, it's Dusty and Bosscat. We used to use it through NAR all the time,
Yep.
and
It,
then it went away. So
yeah,
it is
because
really a great program. Really, really
yes.
cool.
Yeah. So Remax acquired them. And so yeah, it's kind of an exclusive deal through Remax. So it'll be good. I've heard some
So
good things about it.
do they do the work, or do they quote it and find the contractors to do the
I
work if
I
needed?
think they find the contractors. Yeah. So it's very similar to, I mean, I know some people use Binzer Buddies here local, and I've seen I've seen that people have had some good luck with them, and they offer some incentives and stuff. So, but the Boss Cat, I would definitely like to see, get some more information on that. So hopefully I'll be able to get Celeste on here on Thursday. Okay. All right. Oh, wait, Carrie says, be careful with Binzer Buddies. Pretty sure they use AI and not always accurate. Good point. Okay, that's good information. I found best practice to compare with other bids, but sometimes the quoted pricing is much lower than actual costs. Thank you for sharing. Absolutely. Okay. Okay, everybody. Everybody have a great rest. Well, I'll see you tomorrow, but have a great rest of your week. Let me know if you need anything, and I'll see you tomorrow on Coffee with a Broker. All right. Thanks, everybody. We'll talk to you soon.